European stocks retreated on Tuesday morning as concerns over containment of the coronavirus pandemic continue to weigh on investor sentiment. But let's find out what other headlines are driving the markets from Chelsea Delany, live from the Frankfurt Stock Exchange. Good afternoon, Chelsea. Let's begin today's conversation with Wirecard, which, of course, has remained in the news lately. The shares of the German company have surged more than 2% over the past 2 days, even as the company faces bankruptcy after allegations of widespread accounting fraud. What's behind this massive stock rally? Doesn't it come as a surprise?
It is a bit of a surprise. This stock just remains a roller coaster for investors. Even with this 200% surge over the past couple of days, it's still down more than 90%. So when a stock falls as steeply and as quickly as Wirecard has over the past week and a half, you tend to get some nonsensical moves in markets. So we are just seeing some strange things happening in the stock. One potential reason for this massive rally is that investors who had been betting against the stock are now having to cover those positions. It's called short covering. When you borrow a stock to bet against a company, you have to buy it back at some point. So we may be seeing some people trying to get out of those positions. But another potential reason why we're seeing the stock run up so much right now is that there's a lot of speculation, there's a lot of chatter among investors that the company could be seeing interest from various buyers. We've seen a couple of different reports about a payment provider in France, one here in Berlin, that might be interested in buying a couple parts of the business. So as it does go through this insolvency process, it may find some interest in the parts of the business that seem to have some value. So that's really why we may be seeing the stock react this way today.
Now, Chelsea, people are getting back to work in Germany as lockdown measures ease, but the number of employees working reduced hours remain at 6.7 million in June, according to a new report that was released today. Why are so many people still working only part-time?
Yeah, this report also was a bit of a disappointment. The number of people on this short-time work scheme, which is really credited with helping Germany avoid mass layoffs and a huge spike in the unemployment rate, the number of people who are on this scheme still remains quite high. It's gone down a little bit. Last month it was around 7.3 million. But a lot of economists had expected the number of people utilizing this reduced hour scheme to fall quicker than it has, especially as many parts of the German economy are reopening. So wouldn't you sort of dig into the details of this data? We have seen a lot of people, for example, in the hospitality sector and the retail sector, going back to their jobs and getting off of this government-supported work scheme. But we also are seeing increases in certain sectors like the auto sector, the machinery sector. A lot of the more heavy industrial sectors are putting even more people onto these short-time work schemes now. And that's likely because demand in those areas is so weak. We've seen this with some of Germany's automakers. They have restarted production, but they just aren't finding many buyers for what they're producing. So that's really worrying, because that could mean that these short-time work schemes are going to have to last for much longer than people thought. If companies aren't seeing demand for their products, then we might see a lot of people remaining in short-time work for the foreseeable future.
It plans to issue its first green bonds in September, and that's as the country piles on new debt to support its coronavirus stimulus efforts. Tell us how these bonds will work.
So this is a pretty big deal for the green financing part of the market, because Germany is really the most important bond issuer in Europe. It's really where a lot of investors go if they want to buy a super safe asset, and it really sets the tone for the rest of the market. So the fact that they are now issuing a green bond is very important. The way that this bond is going to work is that it's very similar to any other sort of federally issued bond. It's going to really mirror the other bonds that Germany is currently issuing. So it's going to have a 10-year maturity. It's going to have basically the same interest rate. So it's quite similar to a normal bond. But what's different about it is that the proceeds of these sales will be used to support sustainable policies here in Germany. So Germany is really pushing ahead with big spending on green energy, and they in the past couple of months have put forth about 40 billion euros worth of plans to spend on things like electric vehicles and making buildings more efficient, so that the proceeds of this bond sale will hopefully go to furthering Germany's green ambitions.
Thank you, Chelsea. See you tomorrow.